Investors are having to think about what are the different scenarios that may evolve and how do we position from a risk-reward perspective to either mitigate risk or take the ones that we think go forward. When we think about tariffs specifically, it could be that no tariffs come through for a little bit. Right, that's also a possibility. It could be more targeted tariffs on specific industries, key industries that are beneficial to the US. Those first two scenarios may actually lead to lower yields because they don't have necessarily the quantum or the scope and size that they've talked about before. However, if you start seeing tariffs for a whole country, regardless of what the goods are, or on a type of good globally, blanket tariffs, then it could have much more ramifications for implications on inflation and rates markets and be a bit more risk-off.
Trump risks, right? Obviously, it's inflation to the upside. If he is aggressive, as a lot of people worry he might be or could be, right, what's the play? How do you play defense against this?
I think in every policy that comes out, there'll be clear winners and losers. And then you're really looking for, well, which are the winners or losers that have the least sensitivity to that policy outcome. So then from a relative perspective, you could say invested to what is in the equity market, at least a strong rally and strong fundamentals in the economy driving that without too much exposure to those. So for example, the financial services industry, this is one where we do favor financials and banks. And one of the things is that banks, good news is good for banks because they're pro-cyclical, amplify economic conditions through an economy. But also, if you start to see deregulation coming in, net, that's positive. And on the third point of view, if we've had these higher interest rates in terms of the rates market and yields higher, and the market's pricing them higher for longer than they were, say, in the fourth quarter, the net interest margins will be that much richer for banks.
I take what you're saying totally, right? I think everybody in the banking industry, if not outside even, they're looking for, Basel III endgame to die a quiet death, right? So banks have more money to lend, right? But tariffs, inflation, slower growth, etc., means it could hurt loan demand, couldn't it?
If we think tariffs are here permanently, and some may be for a long time and implemented for sure, think about it as a friction to global trade and certainly inflationary. But if tariffs are used for bargaining, as a bargaining chip or tool, that may well be different. And we had this in the previous Trump administration with Mexico, where they came out with tariffs, and then 7 days before the tariffs were due, a deal was done and the tariffs were withdrawn. So there's that possibility as well. And underlying all of this is that if we think the corporate world will work out solutions, if the corporate leadership will say, well, look, if I've got this tariff, what do I do? How do I manage my business going forward? What's the best way? And then you're really relying on that entrepreneurial spirit. And so the fundamentals of economic conditions reflected into earnings per share growth is really one that we can't ignore.
How are you thinking about the politics, Gautam? I'm curious, right? Because, yes, the Republicans have control of both houses of Congress. They are slim majorities, though, right? There are a lot of people who think, look, the more realistic outcome is, he's talked a lot, said a lot of aggressive things, et cetera, but at the end of the day, right, it's going to come down to, can he get it done through Congress? If he can't, and he's already seeing some pushback, right, chances are he's going to try and do it alone or go it alone. I'm not sure what the consequences of that is going to be. We've talked about, an omnibus bill. We've talked about a whole bunch of executive orders, et cetera. What as an investor, what do you do with all this?
I think the one thing we think about is that uncertainty is the one certainty that we have for the next few years under this administration. Look, there are a number of ways you can implement policy in the US looking at the legal procedures. So on the tariffs, there is an emergency economic act that they can do themselves, right? So then it takes there are horse trading, but they can take 2/3 of the combined House majority to overturn that. So you think, well, if there's a clean sweep on the Republican side, are there enough dissident Republicans to help a 2/3 majority overturn? Probably not. So from a tariff implementation perspective, within the first 10 days, it's possible they could use this emergency law to do unlimited tariffs on unlimited targets. And so, yes, it's very difficult to price that into one investment outcome. And hence the scenario analysis was what we were looking at earlier.